I believe that the next item is the Chief Executive and Chief Financial Officer update. Item 8 for those of you who've lost a place.
Thank you, Mr Mayor. Good morning, councillors. Given the pretty extensive conversation around the quarterly performance report, I will endeavour to keep my comments reasonably brief. However, I want to draw attention to a few things of interest for the month. Excuse me. Firstly, just want to make mention of the Auckland Emergency Management weather event of the 9th of May. The Mayor declared a precautionary state of emergency in light of the weather events as they were unfolding or forecast to unfold. On the 9th of May was a precautionary declaration because we were expecting much heavier rain and potential flooding, although the advice at the time was that emergency services were coping and with the level of call-outs at the time. There was a significant value in heightening the awareness of the community to the potential risk. And clearly councillors would have expected that we would have learnt a lot from the events of January and February, and I think that's true and a reflection of the way the team responded on the 9th of May. I spent the day in the Auckland Emergency Management Centre on the 9th of May, as did the Deputy Mayor and a number of other people. I think our teams responded much more effectively, deployed resources on the ground in much closer to real time, ready to stand up shelters and civil defence centres as necessary. That's of course not to say that everything went perfectly. I think while my observation is that teams collaborated much more effectively, people were really engaged, the communication was much more active, including monitoring of social media and our presence on social media. There are still improvements that need to be made, and the coordination of messaging around transport and travel is clearly an area that we need to continue to focus on. It's always going to be hard to get that right. We want people to respond to the circumstances as we're dealing with them in real time, but of course it's never easy to reschedule transport capacity at very short notice either. So getting that balance right is always going to be challenging, but having said that, I think while our performance was better, there's work there to do. The rapid building assessment process that followed the 9th of May, as of the 22nd of May, we had assessed 202 properties, no red placards, 13 yellows, 42 whites. And so that's kind of a wrap-up of the events from the 9th of May. Because we declared an emergency, it's necessary under legislation that we appoint or that we formalise the recovery. But of course our recovery actions from the 9th of May, to the extent that they're necessary, will be incorporated into the recovery program led by the Group Recovery Manager, Matt Tucker. I want to make a few comments in relation to the budget savings program and the organisational change that we've just announced last week. On the 5th of May, we announced a structural change proposal for consultation with staff. That consultation was open for 3 weeks. We received hundreds of pieces of feedback, 800 in fact, pieces of feedback from staff, staff networks, the union, council-controlled organisations and the IMSB. So pretty comprehensive feedback. We confirmed the decisions in relation to that consultation on the 18th of May, and that was confirmed. We communicated those with elected members as well. The net result of all that is a reduction of 160 FTE or positions. You'll note from my communication that there were a significant number of vacant roles in that reduction. That's because for some time we've been really diligent in our recruiting processes and not filling roles that have been becoming vacant especially non-customer facing roles. And so while we've been building up a backlog of vacant roles, we don't get to take advantage of that from a P&L point of view until we confirm the changes, and that's what we've done in the last week, and so those benefits will flow through to our savings program. At a future workshop, I do want to talk about, and we will cover in more detail, further savings opportunities for the year ahead. Obviously, some of those things will be dependent on political decision-making off the back of what was consulted on for the budget. And then later in the year, I think there is the potential, having implemented those changes, to once again kind of step back from our structures and see what further opportunities there are to realise savings by constraining our capacity where discretionary effort would normally be applied. It does have an impact on people, and I appreciate your continued respect for that process and the decisions that have been made, mindful, of course, of the impact that those decisions have on our people. I can assure you we do have good supports in place for our people and are looking to maximise redeployment opportunities wherever that makes sense. In a resource-constrained environment, it's also important we carefully review our corporate work programs, that we work with local boards, committees and governing body on prioritising political work and ensuring that we deliver on our commitments to Aucklanders, and keeping those things in balance at all times while we work our way through these changes is obviously challenging. Of course, there are other drivers of work programs that are not always within our control, such as the government reform program, and so that's a set of factors that we need to take into account as well. One other comment I'd like to make in relation to the annual budget process, and that is in response to some commentary last week around our engagement of flag staff to provide independent advice in relation to Auckland Airport shareholding. Of course, over the coming weeks, it's for the governing body to consider and debate a range of levers and options to deliver a credible, balanced and deliverable FY24 budget. During a number of workshops earlier in the year, elected members have been encouraging of me and requesting, in fact, to make sure that we seek independent advice to help inform decisions during June. No decisions have been made, of course, but equally it is prudent for us to seek independent and preliminary advice to inform those options and to have advice on the implementation should it be required. That is, the implementation of a transaction should there be one off the back of any decision made by the governing body. Flag staff were engaged following a competitive request for proposal process to appoint a financial advisor to provide council with independent advice, including advice on execution strategies, timing considerations, and potential methods of engaging brokers and investors. It's important to note that flag staff are specifically excluded from participating in or benefiting from any sales transactions should there be one, so that their incentive is to be absolutely independent in the provision of that advice. Finally, I just want to make mention of the accommodation provider targeted rate judgment that was received in the last couple of weeks. The Supreme Court ruled that the Auckland Council 2017 accommodation provider targeted rate was reasonable and complied with the legislation of the Local Government Act 2002. The decision is helpful to the local government sector in confirming that the funding tools available to local authorities are flexible if the necessary policy and process requirements are properly met, as they have been in our case. Council will review the decision in detail and potential implications for future funding options. The APTR previously funded 50% of Tātaki Auckland Unlimited's destination expenditure, particularly on visitor attraction and major events. Tātaki Auckland Unlimited's expenditure for visitor attraction and major events for 2023 and 24 was substantially reduced in the budget consulted on earlier this year, as funding from the APTR was no longer available. APTR cannot be reintroduced in the annual budget 23-24, which is currently being considered by the Council, without further consultation. It could be considered as a funding option in the 24 to 34 long-term plan. But it is an important decision, as I say, not just in and of itself as it relates to the APTR, but a confirmation for local government that the funding tools available to it can be applied as long as the policy and process requirements are properly met. And for that reason, it's a decision that we welcome. I want to hand over to Peter for an update on the finances.
Thank you, Jim. Likewise, as this follows on from the quarterly update, it reflects only 1 month more of information and at a higher level. As such, I won't dive too deeply given the opportunity and the briefing we've already had and the extensive questions. But results for the Auckland Council Group for the 10 months to 30 April 2023, capital investment, 2,173 million against a budget of 2.218 billion. So a delivery of 98%, and that's a tick up from what you had as at the end of the previous month. Some further delivery, the cycling program at Lambie Drive site and corridor safety program at Atkinson Avenue were completed. Northwest bus improvements program, Te Atatu South and North Main Works have had practical completion issued. My personal favourite, 5 giant fiberglass liners weighing a total of 80 tonnes were successfully lifted inside a 70-metre deep shaft at the Central Interceptor on May Road, Mount Roskill site. Yeah. Direct revenue was 2215 million against a budget of 2218, so slightly favourable, 87 million to budget, again slightly ticked up from the previous months. There were several overs and unders, but we've talked to those already and they follow the trend of the previous 3 quarters. Direct operating expenditure, 2.846 billion against a budget of 2.827. So this is unfavourable to budget, and while there have been beneficial outcomes from employee benefits, there have been a number of outsourced works and service costs, mainly due to the weather events, and that adverse 53 million or thereabouts has been what's driven that unfavourable result in expenditure. Net debt was quite a topic in the quarterly. A similar trend here. Net debt increased during the month, and the main reason for the variance is the book value of debt at 30 April 2023 has increased due to unrealised foreign exchange rate losses. And this is the movement in the euro and Swiss francs against the New Zealand dollar. Now, importantly, these are all hedged, and even more importantly, these have all reversed as of today anyway. However, we have to report those figures based on the exchange rate at the time. Furthermore, we were under budget for some capital funding revenues, in particular DCs, capital subsidies and asset sales, with working capital movements explaining the rest of the movements. So it's not a concern for me with that movement in net debt. We do have a next rates payment in May as well. So for Auckland Council, the results for Auckland Council for the 10 months, so 1 more month, capital expenditure 402 million against a budget of 425, that's a 95% delivery. Direct revenue is 14 million above budget, and direct operating expenditure is 34 million below budget. The key economic market activity and updates have not changed since the last monthly update, so I'll leave them for now, other than to note that we do have an official cash rate announcement tomorrow, and as always, and particularly in these interesting times, it will be one worth watching. I believe our chief economist might have some comments on what some of the banks have seen in that space shortly after me. Council budget update, so just to reiterate what was what was an update of earlier this month on May the 10th, I provided an update on the budget position for next year, showing that responding to Auckland's recent weather events, along with rising inflation costs, has heightened the challenge in balancing the Council's budget for the coming financial year. And while Council has taken significant actions to reduce costs and streamline the way it operates, that operating gap has widened to $325 million from the previously announced $295 million. And on top of this, storm-related costs of $50 million, some of which are short-term. And to state the obvious, balancing the budget is going to require trade-offs across operating expenditure reductions, ownership options for the airport shares, considering higher general rates increases, as well as prudent use of debt. And different trade-offs have different consequences, and this now needs to be considered as part of the process to set the budget. This process includes workshops very shortly on the Storm Response Fund and those final trade-off options. Final budget decisions to be made on the 8th of June, a date to look forward to, and then prior to adoption of the final annual budget on 29 June, so that it's in place by the next rating year, 1 July. I'd like to finish my update with some mention of our climate risk reporting and our investment in the climate space. So we do have some statutory climate risk reporting. In October 2021, several acts were amended to introduce statutory climate reporting for certain entities and set enforcement and auditing requirements for this reporting as well. This captures us as an issuer of debt on the New Zealand Stock Exchange. We are a climate reporting entity. And as the parent entity in a group, we must report a consolidated group level for this. This reporting is mandatory from 30 June 2024, and while this might seem a while away, it means that we also have to be prepared in prior years before it. The aim of the standards is to provide investors with financial and non-financial information that enables them to understand the climate change risks and opportunities faced by the organisations, which in turn will support the allocation of capital towards activities that are consistent with a transition to a low emissions climate resilience future. The catch in that phrase is investors, so we will have to have a high level of proof. As you all know, due to investor demand, the Council has been preparing a climate statement for several years, and that is volume 4 of the annual reports, and I'd encourage anyone to have a look at that as well. What are the implications for the governing body of this? One of the key areas that we have to report on is how governors ensure that climate risks and opportunities are identified, assessed and managed across the organisation. The expected role was articulated throughout the climate standards, and we will have to ensure that governors are aware of this, and we step up to the mark on supporting you and meeting those aspects. We have been reporting to Audit and Risk on these mandatory requirements, and we plan to engage with the governing body through one or more workshops to work through these aspects. The LTP will need to address our climate-related risks as that fits into these timeframes and reflect how our business model and strategy is changing to ensure we remain resilient to our climate risks. This is obviously a very broad remit, but is something we need to build into our LTP preparation process. And reflecting on where we stand with respect to investment in the climate space. Auckland Council became a signatory to the C40 Divest Invest Declaration in August 21 and is committed to increase its investments in climate solutions and divest from fossil fuels. In April, Auckland Council participated in a 2-day workshop with other C40 cities. This was on investing in a sustainable and net zero future. Throughout the 2-day workshop, each city presented on their progress against different actions of the declaration. So our own presentation was centred around our sustainable finance program, which includes our green bond program and sustainability-linked loans, climate disclosures, and how we're investing in a sustainable future. The presentation also included Auckland Council's long-term plan process and how sustainable finance levers can be used to deliver net zero investments. The team's takeaways from the workshop Our sustainable finance program is world leading, and no other city within the C40 Divest Invest Forum has a sustainable finance program in place. Other cities noted the importance of continuing to issue sustainability-linked products to build awareness and show leadership more broadly. Our long-term planning process is unique in comparison to other councils in the C40, and our 10-year budget 24-34 intersects with the group's target of reducing greenhouse gas emissions by 50% by 2030. All of the cities within the forum are trying to achieve the same outcomes under very different circumstances, and despite our challenges in comparison to other cities such as Pittsburgh and New Orleans, who face significant socio-economic challenges and pressures from the US central government and industry, Auckland is relatively well placed. So I thought I would take the pointer from last month and try and end on a positive note, and I hope I've done that with that reflection on some of the C40 workshop. I'll now hand over to our Group Chief Economist, Gary Blick, for his update.
Thank you, Peter. Good morning, Your Worship and councillors, and through you, Your Worship, I'd like to offer a brief update on the evolving economic context over the last month or so. Firstly, there are risks of additional demand pressures continuing to stoke inflation, primarily from strong net international migration and also from the government budget 2023, which adopted a more expansionary fiscal stance for the year ahead. On net international migration, monthly estimates from Stats NZ have turned strongly positive, with higher inflows since border restrictions were eased in August last year, and those inflows have been particularly strong in recent months of February and March. Stats NZ's estimates are provisional and subject to revision, but in the 8 months since August 2022, when the restrictions were removed, the country's had a net gain of approximately 65,000 people. Now, historically, Auckland's tended to attract around half of the net gain in migration, and we'll have those regional level figures due later this year. While the migration gains are positive for labour supply, they also add to demand and spending on demand for and spending on goods and services, including housing. And those demand impacts tend to dominate the supply impacts in the near term. On budget 2023, the fiscal stance for the year ahead has shifted to being expansionary, and that is it is expected to add to demand and inflation pressures. Providing a bit more detail underneath that, the operating allowance, which is the term used to describe new spending, was increased by 300 million to 4.8 billion for the year ahead to June 2024. The capital allowance has been increased by 1.8 billion to 10.1 billion. And this spend is expected to be weighted very much to the near term, in part to address the damage to infrastructure caused by recent severe weather events. Alongside, the Treasury, in its economic update accompanying the budget, has stated that it expects damage from the recent weather events to lead to temporarily higher inflation for the rest of this year. And that's from the reduced availability of some goods, particularly with the damage in the agricultural industry, as well as demand on capital and labour for repairs and remediation of damaged assets. As Peter mentioned, tomorrow the Reserve Bank will make an official cash rate decision. The OCR is currently at 5.25%, and you will recall that's up from a low of 0.25% for much of 2020 and 2021. Now, that higher OCR has been increasing the cost of finance, and with the intent of dampening inflation through the channel of dampening household spending and business investment activity. Now, the OCR track that was implied by the Reserve Bank in its February monetary policy statement was for a peak of around 5.5 in the middle of this year. But taken together, the inflation outlook and the emerging pressures that I outlined earlier, there's a good chance that there'll be a rise tomorrow, not of 25 basis points, but 50 basis points, moving from 5.25 to 5.75. Now, market commentators and economists are pretty evenly split on that. But nevertheless, it's expected that the Reserve Bank will send a strong message about the OCR needing to remain high. Now, this compares from a month or so ago when expectations were split between a peak of 5.25 and 5.5. And this change just really underlines that we're in a time of high uncertainty and that the outlook can change quickly. Thank you.
Here endeth the presentation. Councillor Dalton, please.
Thank you for your updates. I'm Peter, Gary and Jim. Maybe you first, Peter, just a couple of quick questions. The $53 million storm-related costs, were they a mix of CAPEX and OPEX?
That was just in the operating space, those ones, yeah.
So we're ahead in OPEX, even with those, what we could call a $53 million one-off in OPEX for the storm-related costs.
The majority of that 53 is related to storm, not entirely, but I think that's a fair characterisation.
It's good to see some revenue bouncing back, even though we're still in uncertain times. That's better than the last few years have been. So our gap is now 325 million. Operating across the group is the total operating costs for the group are 4 billion for the next financial.
Probably the best way to look at that is to look in the Expenditure Control Committee tool that we've pulled together that looks at the overall OPEX for the group. I would characterise it more as 5. However, once you take out the depreciation, the finance, etc., there's quite a difference between our total operating budget and the degrees of freedom we have within it to solve for the 325.
Yeah, so the degrees of freedom are the challenge, aren't they? But not 1%. It's not 1% of our total OPEX that we're trying to find.
It is not, but it is significantly higher percentage of the OPEX that we can meaningfully address outside of, and that's why we have consulted within the annual budget on the factors that we have, because those are the areas in which there is the discretion.
Thank you, Peter. Just on the climate risk reporting, that's been really interesting. So we're a couple of years down the track, we've had an awareness of it. So what you're saying to us is that we need to prepare in everything that we're doing now, including the LTP, to be able to meet the outcomes of the climate reporting. Auckland Transport will need to do the same thing. So the budgets, as we set them, are going to need to be prepared to deliver on our commitments to emission reduction. So perhaps a bit more of a shift in risk reporting through audit and risk, where we're perhaps moving away from existing policy. Do you see us at risk, or is this really going to be down to the decisions of this council and the long-term plan that we begin discussing in July to ensure that we're going to meet our responsibilities? And just to tap onto that, this is more than just green bonds. This is the whole budget.
Well, that is the $64 million question with respect to TCFD, or Task Force on Climate Related Financial Disclosures. It is a huge task. It is in hand, but will require a governing body to lean into it, along with audit and risk, so that the risks are understood and managed and the governance layer is appropriately set over the top. So it is one of the key factors that I think will challenge us over the time frame from now to 1 July 24 to embed it within all of our entities.
Thank you. It's going to be quite a shift for a lot of councillors. And Jim, just a couple of questions for you. Of our staff that, or the positions, because it's not staff that are gone, because the positions were left open a lot of the time, what sort of salary band were those positions that have now been vacated in the most part? And I don't know what the bands are, so maybe you could tell me if they were closer to the lowest earners.
Yeah, well, you'll be unsurprised by this answer. It's a mix, but since about November, we've been, in our recruiting processes, have been replacing frontline roles, but not replacing automatically supervisory or management layer roles. And so we've been accumulating vacancies that are more like team leaders, managers, and more senior roles. I can't give you a breakdown right here of the vacancies by level, but because of the recruiting practices, my view is they're more likely to be kind of towards the more senior and supervisory level roles.
Have we been, are these salaries the $200,000 and $300,000 salaries?
There are a couple of general manager positions that are impacted, some senior manager positions that are impacted. Of course, there are fewer positions at that level, so they're less likely to be in the 200 plus range.
Do you know off the top of your head the percentage of Māori and Pacifica affected by these positions?
I don't have that off the top of my head, no.
And the last question is, as we move into the next round of cuts, if the budget goes through as proposed, is it more than likely that the people that will be losing jobs or positions gone will be on the lower salary bands and a high proportion of Māori Pacifica, just given the nature of the proposed cuts?
The areas of staff impact that would be a function of the things that we've consulted on are more likely to be frontline roles, yep.
Thank you, Jim. Thank you, Your Worship.
Thank you for that question. Councillor Henderson, please.
Thank you. Question for Jim and then a question around the finances. So firstly for yourself, Jim, thanks. I'm aware that it's been a really difficult year for staff. They've had storm work to do quite often outside of their normal roles, and now we're looking at budget uncertainties, disestablishment, all those kinds of things. I'd like to know what initiatives you have spearheaded to make our work environments as positive and supportive as possible.
Thanks, Councillor. Look, I didn't come equipped today with a range of initiatives to talk about, but it's fair to say that we work pretty hard on engagement, on having meaningful and kind of helpful, proper conversations through our management chains, through team leaders, with people right across the organisation, and as often as possible or as practical. We have sessions where all staff are invited to, one of normally 6 or 8 different sessions that we run, so that I can directly have a conversation with teams about what we're doing and why we're doing it, and give people the opportunity to ask me and the executive team any questions that they like. And those sessions, as I say, we run them every few months. I think we've got another set of them coming up in late June or early July. People are normally pretty unafraid of kind of sharing their concerns with us, and we are as open and transparent as possible about what's driving the need for change. The most important thing that we can do in support of our people is remove uncertainty, and so, to the extent that we can do that, we always try and do it, but of course we're operating in difficult and uncertain times. And so people appreciate transparency, and in those conversations we try and encourage a level of transparency in the drivers of what it is we're doing and why.
Thank you. Moving on, thanks, Jim. Around the finances, so just kind of a general question. We've already had some further budget challenges through the annual plan process with more of a hole loaded on. To what extent would you advise that we should try and price in continued OCR increases in our budget discussion? I know that does require a crystal ball, but any thoughts on that would be really useful for us, I think. One or either of you, yeah.
That is a great question, and through you, Your Worship. Gary has reflected the view that it's an even bet as to whether the terminal rate for the OCR is going to increase now, and you have seen a couple of banks come out with a statement that they see the OCR as needing to go higher, and perhaps staying higher for longer. You've also seen S&P Global comment on the nature of the latest budget and consider that there's less headroom now to maintain the sovereign rating of the government with the current position. Now, if that shifts, it would also impact on us. My pick is that there is upside risk to what we currently have in the budget based on what has happened since the last month I spoke to you.
Okay, Councillor Newman, thank you.
My question to the economist, it is a degree of crystal ball gazing, but noting what you referred to in your preamble is the continued inflationary environment and the increased demand coming, as well as the fact that there seems to be a lot of inflationary pressure coming through expenditure, leaving the Reserve Bank governor to have to recalibrate what could be the expectations as to the OCR forecast. Are we seeing a scenario where potentially the OCR is going up 50 basis points and potentially even higher still, and then remaining at that higher rate for potentially quite significantly longer in order to try and get on top of the inflationary pressure that you refer to?
Thank you, through you, Your Worship. Yes, that is the scenario, that the terminal rate will end up being higher than the previously signalled 5.5. There's indications that 5.75 is on the cards, and we'll know for sure tomorrow. But in terms of the duration, that's also part of it, that it's expected that the Reserve Bank will signal that the OCR will have to stay high for longer than otherwise to counter these additional inflationary pressures. So that is very much a plausible scenario.
Is a scenario around high for longer, does the first number a 5 or is the first number a 6?
Well, getting into crystal ball gazing, and we'll get a strong indication tomorrow afternoon about what that revised track looks like. But I haven't heard anyone talking about 6s at this point.
Thank you, Your Worship.
Councillor Watson, please.
Yeah, thanks, Mr. Mayor. Just a couple of questions for Jim on Flagstaff, the comments you made there at the start. I'm assuming this Flagstaff, this is the same corporate advisory firm that are advising or were advising us on options for the ports of Auckland too? Is it that the same company?
That's correct.
Okay. Are they still advising us on the ports of Auckland, or has that consultancy finished now?
Looking to Peter, is it finished? No, they are still providing some advice. I think we're towards the tail end of it, to be fair, but...
All right, I thought that was finishing February, so they're still on that retainer that they got for the ports. Just in respect of the council's kind of sort of advisory risk profile, if I can term it that way, do you think it's advisable to have, our two main assets, the ports and the airport shares in terms of value, receiving advice just from the one company? Like, would it have been better to look for some diversity in advice there, given that's two biggest assets that Auckland has?
I think you could think about that in two different ways. I mean, there are some advantages actually in the fact that they understand the totality of the balance sheet landscape of council and some of the different drivers that might surround how we think about one asset versus the other. Quite helpful to have one organisation who understands both. I understand the point you're making though, councillor, and that could be a consideration.
Yeah, thanks, Jim. And just in respect of the airport advice, is that a similar sort of arrangement to the ports in terms of a monthly retainer, or is that getting billed as we go along?
Yes, it is a monthly retainer.
Okay. In respect of the brief that was given to them, and I'm just looking at their website here, and although it's pretty clear they specialise in, divestments, asset sales, privatisation, that they do have a section there without too much detail to do with capital structure and dividend policy. As part of the brief, has there been any request to advice from them more from an investment perspective as opposed to a divestment? I'm assuming they were given a brief.
Yes, they were given a brief. I don't have that brief on me, but can I just explore that question a bit further, please? Is the question whether we are looking to see whether we can increase the dividend from Auckland Airport?
In some of our earlier workshops, we were told in passing that we had looked at, advice, I think was the term used, from various brokers as to, whether to buy, sell or hold. So I'm really curious to know, in respect of Flagstaff, if any advice at any time, given that they're on a retainer, has, explored the notion of, well, what might be there to be a gain from an investment perspective as opposed to selling the shares.
It looks like I'm answering this one. Not in any extent, and I'll explain that around the information that's been provided around the broker estimates. Those are the estimates from the brokers as they provide assessments to their clients. Those clients may be different from Auckland Council in terms of how they wish to value those shares, i.e. whether they want to hold or not, and whether dividends are the sole reason for holding. So Flagstaff have assisted in pulling that information together, but we're not hiring them as a broker to make an assessment on it themselves.
Just in passing, have we sought any advice from anyone then, from that perspective that I raised in terms of the investment perspective? Is there any advice been sought from anyone on that, or just what we've been told today?
The range of broker estimates provides the assessment of the investment opportunity as seen by a broker for their clients. The information provided in the consultation document provides the opportunity cost and return to council of those particular investments, that financial investment.
So I'm assuming that there's no problem. Councillor's been given a copy of the brief then, so we can get a little bit more detail into what Flagstaff have actually been asked to do. That'll be okay, Jim?
Yeah, we're happy to provide whatever would be helpful, councillor. Just to be clear, the essence of our request of Flagstaff was to give us support or considerations as to what methods might we consider for a transaction should one be approved or required by council. It's so pretty limited in terms of the scope of what we ask them to consider, but yeah.
I think, as I recall, the brokers, there was 5 sell, 3 hold, and one of the ones that went hold went broke, so there you go. That was Credit Suisse. Councillor Leone.
Kia ora. I just want to start off with a question to Jim. I just want to feedback that it's great to see that the Director of Ngā Matarai has remained in place, that role, and the review. But I also just wanted to ask the question in terms of our, being a partner regarding Te Tiriti o Waitangi, why was the one Māori director role looked at? And do we have reassurance going forward that would not be looked at again in the near future?
The logic for including it in the proposal was, notwithstanding there was a view that some people thought it was only about cost. The logic from a business point of view was basically a recognition that there was some synergy between our Ngā Matarai capability and the important considerations council are making over the near term from a governance point of view around Māori representation, Māori seats, etc. And And so from an overall governance point of view, there was, as I say, there was some logic to suggest that by bringing those two teams together under the one directorate, even though Ngā Mātaurau would be a separate function, there would be an opportunity for that advice to be kind of better integrated from a governance point of view. You know, that said, I've listened to and responded to the feedback, and we've decided not to go ahead with what was proposed. We'll retain the Ngā Mātaurau function as a direct report to me as the Chief Executive, and that's what we confirmed in our decision on of the end of last week. You know, as to undertakings for the future, of course, those things will be for the consideration of a future Chief Executive. And so, you know, I can't give any undertaking beyond my term, of course. And that's probably all I could really say about it.
Thank you. And just for the other roles, I just wanted to check in that we've maintaining a good relationship with the unions for those other roles as well that we've lost.
Yes, we do have a good relationship with the unions. You know, they provided substantial feedback. Of course, you know, not everybody will agree with everything that we propose, but we've explained our logic, and there's been an acceptance of the decisions that we've made.
Thank you. And just a final one to finance around central government's budget release and recovery and resilience. I know that there's been a lot of korero around the amount of money that's been set aside for local government. Do we have any indication that you're aware of that we would be able to put that into this budget?
Not at this time, no. We'll continue to chase that avenue, though.
Okay with it? Yeah. All right, Councillor Ferry, please.
Thank you. I've got two questions. One is a follow-up to Councillor Dalton's excellent questions around the job losses. So talking about the past cuts and the future cuts, I think it would be, you know, obviously the future cuts depend on what's passed at the budget. But I think it would be helpful for our decision-making to have some demographic breakdowns of that and the salary band information that Councillor Dalton requested as well. So I'm requesting if we could have that provided. I think it will help with our decision-making for the budget. And I would also add in there, I'd be curious to know about the impact on women and also part-time roles. And if we could have that information alongside some analysis around our obligations. Yeah, we do have certain obligations in terms of being, for example, a rainbow tick employer and things like that. Joining the age-friendly city, there's a whole lot of things that we've signed up to as an employer in that space. So if we could have some analysis provided around that for our decision making. I know it gets tricky in terms of identifying individual people sometimes, but some level of analysis would be helpful. I'm particularly thinking about the library cuts. Yeah, because those are frontline roles, and I think a lot of our community aren't expecting frontline cuts, they're expecting back office cuts, which personally I think is a false dichotomy anyway. Then I have another question which is more in the finance space.
So can I take that question away, Councillor? Other than just a flag, as I think you've alluded to, that it's difficult to predetermine which positions might be impacted until the decision is made, and we've gone through a process of evaluating how to implement that decision, and therefore determined as an outcome of the process, you know, it gets a bit circular in that respect, but let me take the question away and see what we can provide.
Sure. I think in the area with the proposed cuts, perhaps what would be useful would be to have some analysis of what the breakdown of the current sort of employment demographics are for the areas that are most likely to be cut. So that's probably more what we're looking at in that space. The other question I have in the finance area is obviously, you know, the central government budget was only announced last week. So when do we think we might have some updated finance information, particularly in regard to the AT side, about the implications of some of those central budget announcements? again, be very important for our annual budget decision making. Thank you.
We are working through that. As you indicated, we've only recently been advised of that information, and there could be some changes to Auckland Transport, for instance, and some of their funding. And we are working through that, and we'll pull that together as part of our budget workshops.
So, sorry, timeframe?
I don't have a time frame because I'm not sure how far along we are in that work at this point in time. But it will form part of the budget workshops.
Okay, noting that the big budget vote is the 8th of June.
Mm-hmm.
So
yes,
we're likely
absolutely.
to have information before that.
We will have to have information before that.
Right, thank you.
Thank you. Councillor Lee, please.
Just a small point. I notice a difference between the CapEx progress so far this year. I think between the year ending April, or the period ending April, and the period ending March, quite a significant difference in CapEx. But I also noticed that in terms of PT patronage, there's a in terms of PT income, there's a comment there that PT patronage continues to outperform budget at 81% of pre-COVID-19 levels. It's not 81% of pre-COVID-19 levels. It's about 64% of pre-COVID-19 levels if you take the period year ending December 2019. So there's quite a variance. It's a small point in the scheme of things when it comes to the finances, but in terms of detail, it's quite important about our PT performance, which is a major OPEX and CapEx expenditure for us.
Thank you for that observation. Through you, Chair, I'll make sure that in future we characterise the comparator information for PT.
Okay. Now, is anyone prepared to move that we FIFI the information provided in this report? Councillor Leone, and seconded by me in the absence of interest. Any further comments? Otherwise, I'm going to move that we receive that report. Thank you very much. All those in favour, please say aye. Aye. The contrary, received.